Welcome back to John Orther's Note. It's been a choppy week for US equities because what matters for investors are the longer term trends. And somebody who knows more about this than most people is probably Professor Bob Shiller of Yale University, who's been working with Barclays. Professor Shiller, welcome to the Financial Times. You've done some quite extensive analysis looking at longer term share valuations. I wonder if you could just talk us through your analysis. If we look at our first chart here, we have your CAPE cyclically adjusted price to earnings ratio. Could you just explain briefly what this measure shows?
Well, CAPE stands for cyclically adjusted price earnings. The way what we mean is adjusting for short-run impacts of the economy on earnings. And all we do to cyclically adjust is take a 10-year average of real earnings. The real price divided by that is the CAPE.
Okay, a relatively simple concept then. But tell us what we need to know really, I suppose, is where are we now on this trend line that you put in here?
Well, of course, it depends on what country. If you look at the U.S., CAPE is relatively high. It's around 22, which is compared with a historical average of 15 or 16. It really does mean that returns are probably not as good as they have been historically. But still okay, you know, maybe something like 3 to 4% real
so
returns
maybe the
is what CAPE would predict.
The market should be peaking then, perhaps, in the US.
Well, it's not quite should be. It's a little bit too strong. We can't, nobody, I think, knows when it peaks. It's not 100%. It's not even 50%. But it's close enough to 50% that it really makes a difference for long-term investors to stay away from high CAPE sectors, high CAPE markets.
And what about the rest of the world, though? In Europe, for example?
Right. It varies by country. I believe UK is low based on CAPE. The product that we've been developing is not yet an international one, but certainly that's something to do, is to move across countries based on CAPE. But it's something that we have to work more on to perfect the actual strategy for doing that.
It's something you have done, though. I know you're...
we have done it for sectors.
We're
doing it for sectors within the U.S.
Let's have a look at that chart then. If we bring on the second chart here, this shows the two sectors we've only managed to have on this chart for utilities and for industrials. Just tell us briefly what this chart is showing.
The low CAPE sectors now include industrials, financials, healthcare, energy, and IT. So low CAPE relative to their own historical performance. The high CAPE sectors are everything else. So for example, consumer durables, they're just not low CAPE. And it's not something that most people know because most people don't average CAPE over 10 years in average earnings.
I have to ask you also about house prices because I know you follow house prices as well. Has that linked to perhaps the overvaluation of the consumer sector at the moment?
So with housing, we do something analogous, price divided by rent. And that had a similar indication. When price, it's like CAPE, but it's for the housing sector. Well, we saw the biggest bubble, and it was an international bubble in many countries in the early 2000s. It peaked, it varies by region, but something like around 2006. And it's back way down. There's signs of life, and there's other places. The world is a complicated place. There are places like Scandinavia or Taiwan or recently Brazil that are showing really strong markets. So it's a complicated picture. In the U.S., we have seen home prices drop by about a third, and they seem to be coming up a little bit now, and there are positive indicators, which is widely interpreted in the media as we're back to the races again. My view is a little bit skeptical about this.
Well,
I think that there are positive signs, but let's not assume that we're rushing off to another bubble again.
Particularly if you combine it with where you see consumer sector on your CAPE ratios as well. Thank you very much, Professor Shiller. So a complicated outlook there from Professor Shiller, but perhaps some ideas for how to guide ourselves through the months ahead.